learn about carbon pricing. What is carbon pricing, right? So some of you may have heard this term for the first time. Some of you may have been hearing it for a while on, LinkedIn and other documents when you read reports. But what exactly is carbon pricing? Made up of two words. One is carbon, and in our field, we understand that when we talk about carbon, we talk about greenhouse gas emissions, right? And pricing means something of a cost, some price, right? And when we join two terms, it means that you are attaching a cost to these carbon emissions or greenhouse gas emissions. It is nothing but kind of a carbon tax, right? Authorities, governments, and other responsible organizations, they want to make companies pay for their emissions, which is how it should be, right? So we can understand it in a very simple manner that suppose you represent a company and your company manufacture iron or let's say steel related equipments or steel related valves or anything, right? Which has and your product has applications in different industries, right? And the manufacturing process is carbon intensive because it is being manufactured in a particular manufacturing unit, right? In a factory, it has a lot of machinery which is operated on fuels. Fuel is required to run it. Electricity is also required, and the process is quite carbon intensive. And you have chimneys and different greenhouse gases. They are emitted into the atmosphere. So the process is resulted in the emission of greenhouse gases, right? In the absence of any sort of carbon tax, any sort of carbon pricing mechanism, you're just emitting it, right, into the atmosphere. If there is a law, if there is a regulation in your country, and most of the regulations, country specific regulations, laws, they talk about the pollution, air pollution, greenhouse gases, sometimes, they are excluded from it, right? So your emissions, the impact of those emissions is passed on, say, farmers, on local communities, on other people. And if a particular amount of greenhouse gas uh, is emitted into the atmosphere, it will spread you know uniformly, right? You cannot say that the emission is more at a particular place and less at a particular place. It is there globally, right? So it is nothing but attaching a cost to these carbon emissions. If you are emitting as a result of your operations, as a result of your activities, you have to pay for it. Simple, right? So we'll move on to the second slide here, which talks about different sort of carbon pricing mechanisms, and we will understand it much better when we talk about these different, carbon pricing mechanism, right? So these mechanisms explicitly assign a cost or price to carbon dioxide equivalent or greenhouse gas emissions, right? Number one is carbon tax, right? We were talking about tax. So number one is carbon tax. And carbon tax is, set by different governments or different authorities. So government set a fee on fossil fuel carbon content. It is a resultant of burning or combustion of fossil fuels to set a particular tax, right? So if you emit, for example, 1 ton of carbon dioxide equivalent, right? And we all have the numbers with us. You will have to pay, say, $100 per ton. So that is the carbon tax that has been set. So Sweden is, you can say, very common example, well-known example. Sweden has the concept of carbon tax, and they are taxing currently at $130, about that figure, about that number, $130 per ton of carbon dioxide equivalent greenhouse gases emitted into the atmosphere, right? So latest number or latest figure, I'm not sure, but yeah, this is about around this figure. Then we have emission trading system. We have in the same system in European Union, wider European Union, UK also, which is a world's carbon market. So what they do is emission trading system. It is also called cap and trade system. It is also there somewhere in US. So California, I think it is also there, and some other countries they are also thinking about or coming up with this kind of system. So emission trading system, they will, so if you are an industry, if you are a company operating in a country where this kind of system, emission trading system is activated, right? It is there, it is regulated. So what will happen is you will be given some allowance in terms of, say that you can emit 100 tons of carbon dioxide equivalent in 2026, right? So 100 tons for you is free. You can do it freely. So this is your limit. You're free. If you are emitting less than 100, then rest you can trade. You can sell it to other company, which is maybe probably emitting more than their allowance, more than their cap, right? If you are emitting less, you can sell them, you can earn money, and it is also a different systems from the from the money that you are earning. You may have to give some back, some to government back, right? So that may happen, or you can maybe keep all the money with yourself. So that's an extra earning, right? If you are emitting less than your cap or less than your quota. If you are earning more, what you can do is there's a in most of the jurisdictions, what happens is after this free allowance is you know absorbed or utilized or exhausted, government at regular intervals they also do auctions of these allowances or these certificates, maybe in the form of certificates you can say, and you can buy these through auctions. You have to pay some, uh, obviously, whatever the price is set threshold, and then you will bid for it, and then you may win, the the authority to burn some more carbon, and you can pay the price to the government, and you can buy. And if you exhaust that also, then you can trade from other companies. So government in a way is de-incentivizing the greenhouse gas emissions to this system. So this is quite a popular system in EU, in UK, and in other countries also. There are a lot of different nuances to it, the detailed systems, and you can go to Google, you can go to internet, and you can read about it whenever you want. But it is very interesting, right? So that's there, and prices are dynamic based on the demand and supply again. So that's there. Then there's something called carbon crediting, right? Carbon crediting, and we already have a module in our course on carbon markets, right? And it's very popular, and we have talked a lot about it: carbon credits, carbon offsets, right? So through some projects, for example, regenerative agriculture, plantation projects, forestry projects, renewable energy, different categories of these projects, you can generate carbon credits. If you're not generating, then you can buy these carbon credits from other companies. There are different companies which are operating in this space. There are different consultants, there are different companies which whose business is just to build these projects, to work on these projects, to generate credits and then sell these credits. So carbon trading is, they happen in the open market, voluntary carbon mechanism. Then you can buy these credits based on the prevalent price, and also carbon crediting the different categories of carbon credits. Also, there's some high quality carbon credits, some are low quality, because there are two different ways you can control carbon emissions. One is reduction, right, from the already existing carbon emissions, and other one is removal, right? The different technologies like CCUS, carbon capture and storage technology, right, which removes carbon. Okay, and then forestry, the different kind of different, plantation forestry, etc. They can also remove carbon. So they're high quality because they're removing carbon. Carbon removal is, you can say, benchmarked above the carbon reduction. Carbon reduction is renewable energy, because if you're not using renewable energy, then you would have been using fossil fuel to generate the same amount of electricity, right? And by using renewable energy, renewable electricity in place of fossil fuel based electricity, you're reducing the same amount of greenhouse gas emissions that would have been generated in case you were using fossil fuels, right? So different categories, different sort of carbon crediting mechanisms, right? So you can buy these credits, and you can use these credits to offset your carbon emission. Okay, so this is open, this is voluntary. Sometimes they are, compliance also. India also has come up with some scheme, this scheme CCTS, right? And we can talk about it in depth more, because this is important for Indian companies, right? And then results based finance. This is also getting some momentum. So the payments upon verified delivery of emission reduction, somewhat similar to carbon crediting, right? So you work on these projects. Companies may hire a consultant to work on these projects, or they can internally work on these projects. You show the demonstrated carbon emissions, that through this project you have reduced this much, a particular amount of carbon emissions or greenhouse gas emissions, and there are different methodologies to prove it, and based on that you will be paid, you will get paid. And this is somewhat similar to carbon credit, right? So these are your direct carbon pricing mechanisms. This is how your carbon can be priced, or cost can be achieved, right? Clear. Then we have indirect carbon pricing mechanisms. This is indirect. So, for example, right, in our country, in India, fossil fuels, so petrol, diesel, we use a lot of petrol, diesel, and we don't uh, drill it. We don't have, huge amounts of, right, your crude oil, right? We have refineries. It is refined in our country, but we don't have huge reserves of crude oil, right? That's another matter. But yes, government has imposed many taxes on the consumption of these petrol. So petrol is quite, costly in our country, and which is right from consumption point of view, it is not that good because it increases the price of items. But from climate point of view, yes, right, if you think in that manner, right, because the fossil fuels are taxed heavily, so indirectly you are taxing the carbon or greenhouse gas emissions which will be emitted as a result of combustion of those fuels, right? So that is indirectly you're taxing carbon, right? Then we have fossil fuel subsidy reforms, removing subsidies on effective raises prices. So this is somewhat similar. Either you remove the subsidies or you tax them. Then there are regulations. You can come out with different regulations. So for example, UAE has come out in 2024. They came out with a regulation, Federal Decree number 11. And similarly, there are other countries which have come out with these regulations, and they say that you will be penalized if you exhausted your quota and you come if you combust more, or if you emit more carbon dioxide equivalent, if you emit more greenhouse gases than the particular limit or a particular threshold, then the penalty will be levied on your company. So that kind of a regulation can also come, and different kind of regulations and standards can come, right? And there are fee baits also. When we say high emitting products pay fees, while low emitting alternatives receive rebates. So simple example is your vehicles. So fossil fuel based petrol vehicles, diesel vehicles, right? They are costly, right? In the sense that electric vehicles in our country and many other countries also, they're getting a lot of subsidies. If you buy an electric vehicle, you will get some subsidy, you will get some rebates, some discounts from the government. It is there from the government, and it will be, you can buy it at a cheaper, you can save a lot of money on that, right? Based on jurisdictions. And this is how government is also promoting the sale of low carbon alternatives, and it's not just in vehicles, it's for other products also. So this is the indirect carbon pricing mechanism. There are different carbon pricing mechanisms. Then some statistics, if we talk about some statistics, global carbon pricing coverage is in, latest in 2026, when we talk, or the end of 2025, there are different 80 different carbon pricing instruments. Carbon pricing instruments means, carbon taxes. So, for example, Sweden has one form of carbon tax. Now, there's another country that may have carbon tax, right? Say, for example, let's say Denmark. I'm not sure if Denmark has a carbon tax or not, a regulation. But yes, let's say Denmark has. Let's assume Denmark has. The carbon tax regulation in Denmark will be different from that of Sweden, right? So they are two different instruments. Then we have emission trading schemes, right? We just talked UK ETS, EU ETS in US, and there's some countries which are about to adopt, which have recently adopted. So they're different instruments. Then we have carbon crediting mechanisms also. We have other kind of carbon pricing mechanisms. In total, there are 80. So 80 different carbon pricing instruments, maybe in 80 different jurisdictions, or one country may have multiple carbon pricing mechanisms. So that way. So total of 28% of global emissions are covered by these instruments. Still 72% are not covered. So there is a huge gap. There's a huge scope also. There's a huge opportunity also. And as we speak in this video, right, as we discuss in this video, there are many countries which are about to adopt these form of mechanisms. So you will see India is in some stage, very advanced stage. Brazil is also in an advanced stage. There are other countries which are in advanced stage, and 1 2 year hence that 28% number will be, it will increase to say mid 30s or even 40%, right? Because it will accelerate. All this will accelerate. All different jurisdictions will want to, come up with these sort of regulations. It is also a revenue to these governments, right? If a carbon tax is, say, introduced tomorrow in our country, right? So government will get the revenue from this tax. And what many countries are doing, they're doing some good work. They have created a central fund, right? A central fund. So the revenues from this carbon tax, it goes into the fund, and that money is, again circled back into the economy in the form of low carbon, say, R&D research, then different technologies, different renewable energy power plants being developed, right? So they're being poured back into the economy in the form of decarbonization measures, right? So countries are doing it, companies are also doing it at their level, right? So carbon tax implementation, the different countries which are doing it. So Sweden has carbon tax, European Union has ETS also, fuel taxes. They have taxes on fuel, so fuel is costly. China, they have different mechanisms, and China is by far the biggest market. India will come into picture very soon. California, they have regional cap and trade system, the one that we talked about, right? They also have a fund. The revenues comes to that fund, and then they develop different projects, renewable energy projects, other projects which help in again further decarbonizing the economy. So the wave countries names also here, right? So ETS, cap and trade system, is there. So regulatory limit on total emissions. They have companies will be given different allowances, that we just discussed the first discussion that we have, right? The first form of carbon pricing. Then low emitter cell can sell to high heavy emitters and can earn money, right? So EU ETS is the world's largest carbon market. Other systems include UK, China, South Korea, New Zealand, California, right? So World Bank Group, they have a report, a trend on carbon pricing. You can just Google it, and you can get a lot of details. You can download the report and you can read about it if you are working in this field, or if you want to work in this field, you will get a lot of different insights. So direct versus indirect pricing comparison, if we do, so carbon tax price certainty is high because government will set a price that will be certain. Quantity certainty will be low because government cannot tax everything, every sort of greenhouse gas emission. Government cannot tax it. It will be very difficult for government to tax an individual's emissions on the car. So the amount of individual that government will tax will be low. So quantity certainty will be low, right? There will be a revenue to the government also in cap and trade. There will be a revenue. Carbon crediting, there's no direct revenue to the government. Obviously, there will be certain fees because it will come under the regulation. government regulation. So government may earn some fees, but not direct revenue, right? So fuel taxes, yes, fee baits, etc. Different innovations that you can do in this. Now, there's a very interesting concept called internal carbon pricing, right? Internal carbon pricing has nothing to do with the regulation. It is, it can be done internally by a company or any government department, but yes, let's limit ourselves to the corporate. So privately adopted mechanisms used by companies or organizations. This is very well, you can say it is there in almost many big companies now, right? Very well known and yes, adopted by many companies already, right? There's no mandate, but yes, companies do it, and there are different mechanisms in this. So number one is your shadow carbon price and internal carbon fee, then implicit carbon fee and internal emission trading, right? So the first two, shadow carbon price and internal carbon price, are very common. Three and four, they're not very common and just, mostly exploratory phase, and some companies may be using it. But yes, shadow carbon price is something, which is hypothetical, right? So suppose say a company, for example, there's a company called, I think BP, or there's one company which is doing it. They're using the many companies, but yes, let's say a company X has set a carbon price of $100 per ton, right? This is the hypothetical carbon price that they have set. Now, what will they do is, suppose they manufacture pharmaceuticals, medicines, and other things, right? And they have different projects, right? They have different capital projects. For example, they're setting up a manufacturing unit in a new geography, right? That setting up of manufacturing unit will be done in a project phase, and that will require a lot of capital, right? They will have to set up a complete new infrastructure. They will have to buy machineries and those sort of things that will happen. And as a result, there are different methodologies also. They will have the data. They can also get the number how much greenhouse gas emissions are resulted because of this new project, right? And if they have set a hypothetical price of say $100, they can very well calculate the the price related to carbon emissions, right? So say they are spending $1 million to set up a new manufacturing unit, right? Then they will have to add the cost accounted to carbon. That is the carbon price, that is the shadow carbon price. So it will may come to say $100,000 is the carbon related cost that they have calculated based on greenhouse gas emissions. So the project cost will come to $1.1 million, right? So the infrastructure cost that they have incurred and the carbon cost. So they can account for the carbon cost, but it is hypothetical, but it helps these companies to do the capital allocations. Then secondly, to help them prepare for future regulations, transition risks, as we learned in our previous videos, right? These are the transition risks. So tomorrow, any new regulation can come which can tax your carbon emissions. So they're already preparing for it. So they have the data, right? So this is the amount of projects that we have done in this year. This is the amount of manufacturing that we have done. And as per our shadow carbon pricing mechanism, this is the price, that we would have paid if there were a carbon tax of $100 per ton, right? So it is a complex, maybe a complex concept for you if you're reading it for the viewing my video for the first time, reading it for the first time. But if you just logically think that you're adding the cost of your greenhouse gas emissions, then it will be very easy for you. And it is a trending topic because many companies are exploring this concept, and as we speak in India, there are very few companies which have which are doing this, right? So if you have understanding of this concept, this will be very good for you, very advantageous for you, right? So in case of shadow carbon price, you're not paying anything, you're just accounting for something, right? This is hypothetical. But in case of internal carbon pricing, you are actually paying, right? So, for example, Microsoft, right? Microsoft is a company. You can go through their sustainability report, and you will find that they're using an internal carbon fee of X dollars. I don't know how much it is, 15 or 20. I'm not sure, but yes. So they're using an internal carbon fee. All the investments that they're doing, all the projects that they're doing, all the greenhouse gases, right? So they have set a boundary. They're not attaching internal carbon fee to 100% of their emissions, but some of their emissions, right? So all the companies are doing this. They're not attaching it to 100% of their emissions, but some of their emissions, right? So maybe direct emissions as a result of their manufacturing, for example, they're setting it, right? So Microsoft calculates it every year, and they set this internal carbon price, and they have created a central fund within their own organization, right? And they transfer that amount of money to that fund, right? And it is reflected in their financial statements, in the balance sheet, in their profit and loss, right? In their cash flows. So they transfer that fund, and they use the money, which is transferred in that fund. They use that money to do or to develop environment friendly projects, or to advance the decarbonization, maybe in their R&D, right? Maybe to develop some renewable energy or some solar kind of a solar plant or windmills, or those sort of things. So this is how it is happening, right? So these are the most common carbon pricing mechanisms that are there, and is to just to make you understand in a simple manner. Then there's implicit carbon price and their internal emission trading. They're not very common, and I will not go deep into them. And shadow price and internal carbon fee, there's a difference that they've given. No money changes hands, so because it is hypothetical, right? Real money flows because it is not hypothetical, and they have to transfer the money. Investment screening and risk assessment. So it is very important in risk assessment, right? So you're quantifying your risk, right? It will also help in some of your disclosures. If you're using this shadow carbon price, you can very easily, you can set a price to your carbon emissions. So you can say, yes, this is the amount in dollars, these many millions of dollars our greenhouse gas emissions are priced at. Okay, the notional impact on P&L, no real impact, but it has a real financial impact. And the different sectors which are using it. So Microsoft charges $15 per ton. I think it has been, very recently updated. BP and total. So BPS, BP and total, they're using shadow prices. Now they have increased, I think, $200 per ton. And how these shadow prices, shadow carbon prices, or internal carbon prices, how they're calculated, right? So that's the next topic that we see. But yes, they're calculated based on multiple factors, a set number of factors. Yes, if you have to come up with a shadow carbon price, for example, for your study, how will you do that? Right, so there's a process which these companies follows, and this is a desktop study kind of project. So they go through different research reports, right? And the go-to report and the most common report that they read, they go through, the team responsible, the responsible person, will be the World Bank reports mostly, trends of carbon pricing. There's a report called Trends of Carbon Pricing. Let me just check if it is there. Yes. So this is the report, right? This is the summary version, executive summary of state and trends of carbon pricing in 2025 by World Bank Group, and I can also attach it. I can also provide it to you. So this is carbon pricing. These are the jurisdictions, the different data points available in this report, which you can use, right? So that is the thing that is being used. So the different study that they do, and sometimes say if you're following European Union ETS and they have set the carbon price, then you can also follow the same carbon price. So some companies they're doing this to come up with the shadow pricing. Some companies they study their peers and they use the same price. So for example, in the same industry, if you say say for example, Mercedes or say BMW is using some form of shadow carbon price, then maybe Ford Motors will use the same instead of carbon price. It's just a hypothetical example, but this is how they can do. Why companies use internal carbon pricing? Yes, risk management. They understand the exposure to future regulations, which are transition risks, before they arrive. So they're preparing for the future. They're preparing in advance. And capital allocation also, they do long-term investments, right? Because investors are asking for it. The net zero commitments support voluntary carbon reduction targets, so you can know how you can do, where you can better allocate your capital, right? Then disclosures also, right? So that's there. Challenge is mostly on the governance front. The research, the process that these companies are following is not a standard process. They're following different sort of processes. Somebody is using something, some companies using based on some other factors, right? So this is happening. But yes, as we move forward, we are making it better. We're doing better, and I think in next 2 3 years to come, we will have more mature processes, more mature disclosures as for the carbon pricing, and more mature mechanisms also available to us, right? So that is there, but it is a very important topic, and I will have more videos, some other, in-depth videos on this topic, right? So please go through this. I will also test some, on my LinkedIn, some documents, etc., which you can go through. Thank you.